Hello and welcome to Indian Open right here on BloombergQuint Live. It promises to be an interesting day, an interesting morning of trade simply because of the heavy nature of news flow that we have surrounding us. Aside of the fact that RBI came out and did some backstopping to the mutual fund confidence yesterday, and we'll talk about it with Nimesh Shah a bit later on today at 9:35. US markets at a steady close, ending marginally in the green. Asia is starting off not on a bad note. SGX Nifty is likely to pointing towards our market starting off not on a bad note, which is all good signs. And crude prices took a dramatic nosedive in trade yesterday. So that's the other factor that you got to keep in mind. Now, viewers, remember, we mentioned this in trade setup yesterday as well as during the shows yesterday that for the markets to do well, financials need to perform. We've had the first round of the performances in the Bank Nifty yesterday. Big move, big up move considering the circumstances, and NBFCs were piggybacking on that. Now, if we continue that momentum, then this oversold, battered, likely underowned in the last 1 month pocket, which is banks and NBFCs, could well be in focus. We have IndusInd Bank results that will react to it. Axis Bank results will come out today, and that will also be something that the markets will be watching out for. So I dare say I would watch out very, very closely for the Bank Nifty. But we should get in Peter Mcguire in moments from now to talk about the crude price fall, because that's the other one. Do we have Peter Mcguire? We'll get him in just moments from now. My production team is telling me he's still not on air. We'll get him as well, because I think the other big monitorable today is what happens to crude. What's happened to crude beneficiaries or crude price fall losers, if I can use that term loosely. Such a sharp fall and happening twice in the matter of the last few days suggests that the downdrafts in crude are not over. Very likely. I'm not an expert. I don't think too many people can predict what will happen to crude. We'll ask Peter Mcguire about it. But if indeed crude prices are likely to stay lower, then you might well have the impact being seen on some of the stocks that get impacted, either positively or negatively. So maybe an ONGC, maybe a Reliance today, because of the rights issue announcement as well, a possible rights issue, as well as other things could be in focus. And you might have the crude oil price beneficiaries in that sense, the paint companies, which are probably the only ones which will benefit because airlines are shut and OMCs are not doing the sales. But the paint companies, for example, would be very, very much in focus in the session. So those are a few things that you got to keep in mind. Let's get in Mayuresh Joshi to talk about his thoughts in the markets currently. Mayuresh, good having you. Good morning. Thanks for joining in. We'll try and get in Peter Mcguire to talk about crude as well. But Mayuresh, just wondering, without getting into what the crude prices could do, because I mean, unless you have a view there, welcome. But I don't know how it's possible to predict so much. But with the presumption that crude prices are going to stay lower for the time being, would you believe that the crude price beneficiaries and what within that pocket might actually stand to gain over the medium term?
Morning, Neeraj. So I think we are coming out with a very interesting report on oil and gas. So I'll definitely forward that our take in terms of what our expectations is in terms of crude and crude dynamics in general. But you're absolutely right. I think the way the markets are behaving at this point of time, the key beneficiaries who use crude or crude derivatives at their input costs are going to significantly benefit over the next few quarters, because it doesn't look like crude is going to have a runaway rally of any sorts from the levels and the demand conditions that it is probably at this point of time. So is there a momentum trade? You're absolutely right. And I was hearing your morning piece. I think aviation, though I think a key beneficiary, I think with the Lagarde and the lockdown effects that it has seen, I think the revenue hit itself will be quite substantial. So I think earnings substantiation for crude fall probably does not fall fit for aviation. But yes, I think paint companies, for example, some of the adhesive makers, I think these stocks can very well be in momentum, because almost 20-25% of their input costs, which are crude or crude derivatives, actually come off substantially. But the other element, Neeraj, is, and that's why I'm saying it's a sentimental or momentum trade, is how the demand comes back, because you're obviously going to see volumes as well as realizations come off as well. So I think there is going to be an offsetting effect to that degree in terms of earning expectations being muted for the better part of the next few quarters or the annualized basis for coming financial year as well. So yes, momentum trades absolutely possible. Paint companies, adhesive makers, I think absolutely will show positive momentum if crude prices behave the way they are and they stay where they are.
Okay. Mayuresh, the other big traction that we saw yesterday was banks. Now, banks is one thing, but the battered and bruised NBFC pocket is piggybacking on that, isn't it? Yesterday was the first day. Uh, what could I heard from a lot of experienced dealers, Mayuresh, that this week could belong to NBFCs. My question is, what could be the reason? Let's work with the hypothesis that NBFCs might do well. I'm trying to ascertain why is it that NBFCs would do well in the short term. Any thoughts?
So, Neeraj, I think 2 to 3 broad angles that I can probably perceive of. I think the pain that the NBFCs are going through, and it's not just because of the COVID crisis, even pre-COVID crisis, the kind of deacceleration that you saw in the overall growth prospects, whether it was the advances growth, the stickiness that you probably saw in terms of the collection efficiency, specifically for microfinance companies, for various reasons put on. And the third element, obviously, is the elevated provisioning that was required because of the stress that they had to recognize, specifically towards the unsecured lending exposure into their books as well, whether it's SMEs, MSMEs, whether you're talking about unsecured credit in terms of personal loans, so on and so forth. So that's the first angle that one needs to consider. The second element, obviously, is in terms of the borrowing element that NBFCs themselves have. But the large part of the borrowing chunk comes from diversified sources. So banking sources, NCD market, the CP market, yes, housing finance companies, NHB market. And the third element of these kind of corrective actions that are being taken, both from regulators' perspective.
Mayuresh, sorry, I'm losing your line, so we'll try and repatch that. But largely, the point that Mayuresh was trying to make, a couple of things. We'll try and let him finish his point on why NBFCs could be doing well, a 3-point part of what he was saying. But mind you, the other big vulnerable, as I said very quickly at the start of the show, was crude. We are trying to connect with Peter Mcguire. I think we have him now. Peter, good morning. So good having you. Thanks for joining in. These news flows about large oil ETFs or otherwise trying to liquidate their near-term positions now become a bit of a recurrence. How do you read into this, Peter, and what does it tell you about the near-term outlook on crude?
Well, good morning. It's certainly showing one of, I think, much confusion, and certainly we've seen a very, very heavy sell-off in Asian trade this morning. That's continuing to the downside push. You've got that, I think, exacerbated by the United States oil fund. So everyone's mindful of what impact that's having to the market over the last matter of hours. And that further softness, I think, will probably continue, will be possibly in single figures by the end of the day, the way it's trading at the moment. And there just seems to be a concerted push to the downside. There's nowhere to store oil. We understand the demand destruction, and the storyline is very, very evident, and we're all mindful of the situation.
No, so Peter, I think everybody would want to be knowing, what do you think about what could happen in the near term? But keeping in mind all of this, I mean, what's the new normal? Is there a new normal in crude which will be lower than the $40-50 per barrel price, maybe around $20 per barrel, maybe about 25, maybe around 30, maybe around 15? What do you think is a new normal, or is there a new normal in place?
Well, I think there's a new normal until we get back to some form of consumption that is close to the 100 million barrel a day number, and until you actually get there, then crude's going to be under pressure unless you can take some dramatic hits from a production side, and then you need to see, large curbing of production across the big players. So we're mindful that that's going to be introduced in weeks to come, but it's hard to ascertain how quickly that we can rebound to a fully moving economy like we saw in only 2 months ago across the globe. So this is uncharted territory, and in turn that creates a lot of angst in the market, and the reality is it seems to be softer from here, not stronger.
Yeah, well, I think softer from here, not stronger. That's the word coming in from Peter Mcguire. Peter, one very quick question. Any comments on the currency, the dollar? You track that very, very closely.
Well, I think there's possibly, this is a big week. We've got BOJ, we've got ECB and Fed meets. So we're conscious of as far as what the BOJ came out with yesterday. I think that US dollar index is going to pretty much be range bound between that 98, 99 to say 101 sort of number. May edge a little bit higher, but over the next matter of days until we hit that non-farm payroll on Friday, I think it's pretty much range bound. Though after that period, I feel as though that we could see some dramatic move over the weekend. So let's just wait and see. It's going to be one surefire week of volatility for currencies, commodities, and certainly the equity markets could take a little bit of a backward step.
Okay, Peter, we'll leave it at that. Thanks much for taking the time out and being with us. Mayuresh, just wondering, what does all of this do to Reliance? There is a rights issue, and we'll talk about Reliance in detail as well. But okay, let me rephrase my question. We'll come to Reliance individually in a bit. What does this do to upstream companies, the mammoth fall and the volatility in crude prices?
No, so again, two elements here, Neeraj. First, obviously, I think the dependence in terms of crude oil realizations obviously is going to hit upstream companies pretty hard. Because when you probably talk about last quarter's numbers, the average realization was anywhere between $60, $62 a barrel. When you're probably talking of that being crashing, and as Peter Mcguire was saying, I think if prices are expected to stay abysmally low, you're probably expecting to see that entire trickle-down effect come down to the bottom line. The second element that also needs to get observed for upstream companies is the gas pricing. Now, since gas pricing has got revised to $2.32 per MMBTU, I think the kind of gas numbers that upstream companies produce, I think that's surely going to take a hit in terms of top-line growth as well. Again, for a company like ONGC, for example, I think their overseas operations through OVL, with realizations going down on a global scale in terms of Brent pricing, you're obviously going to see that trickle-down effect. Though I think the partial offsetting effect happens to rupee depreciation in terms of the realization effect. What this also does is that the capex that they probably put forth starts coming off significantly because they need to protect their cash flow from operations. And as cash flow from operations become constrained, the entire dividend payout argument probably goes for a toss. So I think upstream companies are in some sort of an earnings pains for a prolonged period of time.
Okay, well, so that's the market setup. Now let's quickly get into the stocks in news and the results. First, Sumit Sarkar joins in with a roundup of everything else, everything that you should focus on in the session today on a stock specific front. Sumit, good morning.
Good morning, Neeraj. I'll start off with the earnings that came in post-market. Firstly, IndianOpen Bank, the fourth quarter numbers were largely in line with the estimates. The revenue was beat while the net profit was a miss due to higher provisioning. COVID-19 related provisioning stood at close to 260 crore rupees in the fourth quarter numbers. And on the asset quality stress owing to COVID-19, the bank has guided for potential GNPL impact of nearly 80 basis points based on the current lockdown recovery trends that the bank has been seeing. It also said that the deposits have stabilized in April with inflows across retail, corporate and government categories for the bank. Secondly, Hdfc Life, gross premium were up 3%. Net profit, however, it was down 14%. VNB margins for FY20 stood at 25.9%, which is the highest across board for Hdfc Life. Also, the 13-month persistency improved to 88% for the financial year 2020 versus 84% last year. Adani Power, the revenues were down 8.2%. The company reported a net loss of close to 1,300 crore rupees as against a net profit reported by the company of around 635 crore rupees last year. But do remember, last year there was a net profit because of higher other income, which was close to 1,400 crore rupees in the base quarter. Also, depreciation and interest charges during the quarter, that is the fourth quarter of FY20, were higher due to consolidation of two arms, and that's the reason we are seeing this net loss amount at close to 1,300 crore rupees. However, the company's EBITDA, that was down 66%, and margins came in lower at 3.3%, which were impacted due to higher other expenses and employee costs in the fourth quarter of financial year 2020. Other than this, Reliance Industries, because they will be considering rights issue, fourth quarter results and dividend payout on April 38. Indiabulls Real Estate, because the senior management has decided to take an average pay cut of nearly 50% for financial year 2021, with the vice chairman drawing nil salary for FY21. Also, Judge Dial, lastly, on the back of the board meeting that will be on 38, where they will be considering buyback of equity shares on April 30th.
Okay. Well, Sumit, thanks so much for putting that into perspective. Now, keep in mind, I think the key is what will happen to companies like IndianOpen Bank. And I just want to lay out what brokerages have said on IndianOpen Bank. So Investec They've maintained a hold with a target price of 450. They believe that the revenue momentum is better than expected. The impact of COVID to be felt from Q1 FY21 onwards. And the next 2 quarters will bring in more clarity. Bank of Bob Caps, they have maintained a buy with a target price of 590 as well. They believe that there could be an 80 basis points impact on GNPA because of COVID-19. And Morgan Stanley is maintained overweight with a target of 525. They believe the trends are in line. The guidance is positive. And while FY21 is expected to be tough, both on revenues and asset quality. A 6% bump up in trade yesterday, Mayuresh. What do you do with an IndusInd Bank today?
Well, there might be some positive momentum because there were some positives out of the results as well. So I think deposit mobilization was extremely strong for the month gone by. The NIMs were at an all-time high. What we probably saw in terms of the overall slippages number on a quarter-on-quarter basis, I think it was still manageable and it was not a horrendous figure that one was expecting on the street. But Neeraj, I think it's more a case of reality versus the actual figures coming through. So I think the street is more cognizant of the fact that Q1, Q2 might be very, very soft for the bank because the kind of exposures that they've got, commercial lending, almost 12% of their advances, personal mobility lending, I think almost 6% in terms of card spending, so on and so forth. You've also got some partial exposure to gems and jewelry and the MFI segment as well. So all these segments are going to get hit significantly in terms of reported numbers for Q1, Q2. How bad that hit is going to be, I'm not really sure at this point of time. So there are ifs and buts. I think there is a sentimental uptick for the stock, but I'll still wait and watch because I think as these numbers start trickling through over the next couple of quarters, I think the readjustment drastically in terms of figures and even on a book basis, whether it's a book value and an adjusted book value, will probably start taking shape. So wait and watch for me. But yes, from a sentiment or a momentum perspective, the stock might react positive.
Okay. Well, so that's IndusInd Bank. HDFC Life is the other one. We'll talk about that. But Nikki's waiting by to talk about Ambuja, which could well be the big stock of the day today. Nikki, how were the results? Very quickly.
Strong set of numbers. Volume took a hit, but then the EBITDA per ton performance and the realization really led to a strong show. Basic numbers first, where the revenue is down 3.5% at 2,800 crore. About the estimates, EBITDA up by 30%, margins at 21% as compared to 15% on standalone basis YOY. The PAT seems to be a little in line with what the estimates with, even as the EBITDA was higher, negated by the lower other income, which is the dividend from ACC has not been recognized in this quarter for Ambuja. So that is why you've seen a little in line with estimates profit in line number. Sales, as I mentioned, volume has taken a hit by as much as 10%. It's on account of the lockdowns announced, but then the realizations, those have been higher by 7.5% on account of higher cement prices in North and Gujarat market, which has essentially benefited Ambuja Cement, which has no presence whatsoever in South market. EBITDA per ton, that's an important number, which has come up by 44% at a number of more than 1,045 rupees per ton, which is a great surprise and also beneficial for the stock as a whole because it's essentially the lower energy cost, which is in per ton basis, which has fallen down by as much as 12%, and the freight cost too, to an extent by 2.5% year-on-year basis, which in turn has led to a strong show coming in for Ambuja operation.
Well, thanks a lot for that. And before I get to Amit Harchekar, I'll be compelled to ask Mayuresh about Ambuja, a showstopper performance, Mayuresh, of sorts on cost control. We've seen what's happened to ACC post those numbers. What do you expect Ambuja to do today?
Yeah, very good set of numbers, Neeraj. So I think apart from the volume miss at 5.76, I think that was a given pressures. But what has probably happened is the EBITDA per ton. So as Nikki was mentioning, I think at 1,045, I think better than most analysts on the street. And it's the presence of their key markets, North and West, which are still holding up, both in terms of pricing as well as demand expected to bounce back very, very strongly. Now, as the plants start functioning partially and in full capacity over the next few weeks and months, I think the stacking that will happen from an inventory level at the dealer end should be quite substantial over the next few weeks. Yes, you're entering the monsoon season, but that's one of the weakest quarters for cement companies. But the second half, or the quarter 3, quarter 4, should be a very, very strong quarter for Ambuja. So yes, I think remain positive. Anybody holding on should continue holding on.
Okay, so watch out for this. Well, Amit Harchekar joins in with his thoughts, and boy, Amit got this bang on, at least this rally. He was bullish on it. He was creating longs a couple of days ago as well, and I think those longs are paying off right now. Amit, really good call. How do you see the setup going ahead now?
Thanks, Neeraj. What we think that this rally is still long way to go. In fact, if you see the last 1 month of consolidation in the Nifty index, it has turned out to be a bullish pennant. But when you see, it also resembles like a bearish wedge, which has even forced a lot of short positions getting piled up on this rally. We believe this eventual breakout above 9400 will create a lot of short covering, and that will force Nifty back towards 10,200, 10,300. Apart from that, if you see the Nifty service sector index, it has also completed a running symmetrical triangle, which is bullish. So far, there was no momentum seen in service sector index, and that was not giving that much punch effect to the Nifty. Right now, we are expecting a breakout to even get activated in that Nifty services sector index, and that should help to rally further by 10 to 12%. So we don't see any problem for the Nifty crossing 10,000 in the near term. On the very short term basis, we are looking for a target of 9,700. Stop loss for the long positions created today would be at around 9,100.
Would you then, therefore, Amit, go long on NBFCs as well? Bajaj Finance has just started making a move. Some of the others have just started bouncing back.
Not really, because if you see, Nifty Financial Index has confirmed of a start of a long-term bear market. But as I said, the Nifty Services Sector Index, which has a good part of even financials, they may go through a phase of underperformance. So if Nifty rallies by around 10%, they may go up by maybe 6 to 7%. We expect major contribution in service sector index coming from IT index, because IT stocks have seen good long accumulation in past few days, and we expect they do outperform in order to take the Nifty services sector index. So we are not that optimistic on financials from a positional perspective.
Okay, so what are you optimistic on? What are your top trades today, Amit?
Well, our first pick would be Reliance Industries, and we have been pushing it since last few weeks. If you see the BSE Oil and Gas Index, we still think it has completed a flag pattern on the long-term basis, and we still see an upside of 60% on that index itself. So overall target for Reliance Industries, we are looking somewhere around 1900 to 2000 in matter of next 3 to 4 months. So even at these levels, I think Reliance becomes a good buying. The stop loss we would recommend for a short-term perspective would be 1350, and on a very 1 to 2 weeks perspective, or even next 3-4 days, we are looking for a target of 1650. Our second pick would be from service sector index, which is TCS. We think TCS has also gone through a phase of long consolidation, and we can easily expect TCS to cross 2000 in the coming weeks. So TCS, the stop loss we would recommend it at 1750 on a closing basis.
Okay. The other question is then therefore to Gaurav Bissa. By the way, viewers, mind you, the last 3 to 4 days I've been talking about some trades which look good technically, but fundamentally there could be an issue or two. I'm not suggesting Reliance will have an issue. It's a very strong stock. Be mindful of the fact that there might be a rights issue announcement, and you don't quite know how the market behaves in a very, very short intraday position basis on a rights issue pricing announcement as well. So just be mindful of that, nothing else. Oil coming off might have a bit of a bearing too, but yeah, the trending seems very strong. Gaurav Bissa, good morning. What is your approach to trade today?
Good morning. If you look at the overall movement in Nifty in the last few days, the supports are seen at levels of 8,900, 9,000. We are seeing some writing happening at these strikes. On the other hand, we are seeing some struggle at levels of 9,300, 9,400. It's not been a very easy ride above that. And as Sachidanand said, that above 9,400, we can see some breakout. I find that possibility that it can go towards level of 9,600. There is a bearish harmonic pattern being formed at 9,600. So I would be a little bit cautious about that. If it trades around 9,600, there is a possibility we may again slip towards level of 9,000 from those levels. But for now, I think there is some more upside that can be seen. If we are sustaining above 9,300, we can again see a move towards 9,400, 9,420 by today, tomorrow. So I would be optimistic for Nifty, at least in a very short term.
Okay, what about specific stocks, Gaurav Bissa?
The first recommendation would be buy on Titan. We have seen the stock taking supports at 899 levels. Some buying direction is also emerging at lower levels. A breakout on hourly charts can go towards 970, 975, stop loss of 905. Reliance for now, it's looking weak. It's found a bearish harmonic pattern on hourly charts, and we have seen resistance coming time and again from levels of 1450, 1460. RSI is also supporting this postulate. So in my opinion, on a very limited time frame for next 34 days, there can be a 3-4% dip that can be seen in Reliance. So one can sell around 1440 stop loss of 1465. On the downside, anything like 1480, 1400 is possible.
Okay. Well, so do watch out for all of those trades. Now, Mayuresh Joshi, a couple of insurance-related questions because that sector might well be in focus today. First, HDFC Life numbers. The stock had rallied a bit ahead of the numbers yesterday. Did the numbers inspire you enough to make a fresh investment here?
So Neeraj, again, I think if you probably go through the transcript and the expectations that the lockdowns probably had a say in terms of how the premium collections were for the quarter gone by, as you can very well expect, that when you're probably trading into the weakest quarter, which is Q1, along with lockdown pressures, I think that entire number will get accentuated in terms of the degrowth statistics that one are expecting about. The second element on an annualized basis, I think the numbers still stack up pretty well. So I think the overall insurance premium growth is around 12% with the new business premium actually growing 15%. The value of new margins for the entire year itself, and just leave aside this quarter, I think have been held about 25%. Yes, I think the solvency hit has taken place, but I think there were a couple of exposures, both in terms of the Yes Bank exposure, which took a hit of almost 2% for that, and the fall in terms of the erosion for equity value prices as well. So I think if you adjust for all this, I think the annualized numbers probably look far more decent at this point of time. The embedded value itself at 20,900 crores, I think is growing at a very, very reasonable clip with a return on embedded value at 80%, and persistency ratios on the 13th and the 61st month still held out to be pretty well. Longer period of time, I think underpenetrated, it still remains to be one of the sectors that one would look out for. Short term, the pain might exist. So I think investors holding on with the medium to long term, you should continue holding insurance stocks, including HDFC Life.
Okay. Mayuresh, yes, Axis Bank numbers today. The Economic Times, of course, reports that there is a likely deal announcement that could happen as well between Axis as well as Max Life. What kind of impact do you think this has on Max Financial? Because the stock had already rallied a bit, maybe in anticipation, maybe otherwise, because all financials are up. Do you think if this deal gets consummated, there could be upsides for Max Financial?
So let the deal get consummated. I think it happened. It was expected last time as well, Neeraj. So I think at what valuations does it finally go through? I think this is some element that we probably need to look out for at this point of time. Again, I think there has been a lot of traction in the stock itself. So I think it might very well turn out to be the case once the news is out that you've actually bought the rumors and sold on the facts that's come through. So no specific recommendation on Max Financial at this point of time, but for the bank as a whole, I think like IndiSID, I think the management commentary, I think Q4 might be a little bit on the softer side, both in terms of provisioning, accentuated asset quality pressures getting played out. What happens to the watch list is something that I watch out for. So the funded exposure at 5,200 as on the last quarter, the non-funded at 3,300, which added an element of telecom exposure to that book. Whether that book probably gets enlarged because of SMEs, MSMEs exposure as well, and what kind of slippage number are we looking at specifically from the corporate side? Because last quarter was almost 63% of the overall 6,200, which came from the BB and below book. So I think these are numbers that will be more interesting to look out for. Max, I think, would largely be a play in terms of what numbers get announced surrounding the deal itself at this point of time. So Axis is where I'm more concentrated on in terms of number of.
Okay, viewers, we'll talk about the technical aspects on HDFC Life, on Max Life, maybe on IndiSID Bank and Bajaj Finance. That's a big one. So 3 or 4 names post market open because the markets are about to kickstart trade. The key would be after we start off the way we would, can we build on to the gains there? That's essentially the key question. And should you be worried about some long positions that you have in your portfolios? Likely not. But let's wait and watch. In the near term, there is a bit of an uptrend that seems to be at play right now. And good for people who have their portfolios on, because that's what helps, doesn't it? I mean, if you have an existing portfolio, that gains with the markets moving up. So don't rue the fact that you didn't put in too much of money to work. Your existing investments should hold you in good stead. But here's how the markets are starting off in the pre-open session. There is, well, a bit of a mixed bag trade, but the Sensex showing about 1.25% or thereabouts. So let's wait and watch. The Nifty flat for now. Let's wait and watch what happens during the course of the pre-open session. But I would watch out for the financials, and I would watch out for IndiSID Bank and HDFC Life. IndiSID Bank on the index showing a 10% pop. I don't know. I think JP Morgan came out with a note which didn't seem to be too impressed. So I don't know if there'll be mixed reactions on IndusInd Bank, but looks like starting off well. There is some strength that is evident in Axis Bank today, about a couple of percentage points, 435. So let's wait and watch if that happens. Some strength in the likes of Sun Pharma, JSW Steel, UPL, Infratel. And at the losing end, maybe just early days, but HDFC Bank looks like starting off slightly wobbly. I don't know if it'll have this kind of a move. In fact, the bank Nifty do well, HDFC Bank has to do well. So let's wait and watch if that were to happen. At the broader end of the spectrum, 2 or 3 names that I would very, very keenly watch out for include Adani Power. Horrible set of numbers. Will the stock react? For now, shows a 10% downtick. Ambuja shows a 10% uptick. Mindtree looks like it'll repeat the move, but this might be early days. And Just Dial on the buyback announcement looks like starting off well. So 3 or 4 names that I would very, very keenly watch out for. Ambuja seems like starting off with a bit of a bang, so may not get any chance to start it off on a big note. So keep that at the back of your mind. And Max Financial, yesterday's big mover, seems like starting off well, about 3.5-4%. Let's wait and watch if that is what happens in trade. But Ambuja Cement could well likely be it. Bajaj Finance could well be it. 2070 now. That's a 100 rupee gain from dire prices in a matter of 2 days. But early days as yet. Let's wait and watch. The currency too, starting off marginally flattish. Let's talk about some of those usual suspects then. And Amit Harchekar, I would want to come to you on HDFC Life. What do you expect the stock to do today?
Well, I think this stock is likely to move in the band of maybe 7 to 8% on the higher side maximum. So we don't expect the stock to move beyond 525 in the upcoming rally. So the strategy would be, if anyone is holding up, I think the best way to exit would be around 520. Overall, we have a downside target of around 395 to 400. So we expect this bear market should get over around 520 to 525.
Okay. Fundamentally, it will be interesting to see, as Mayuresh mentioned as well, but the internal metrics of HDFC Life seemed a lot more impressive, and therefore, if insurance has to gain, HDFC Life too will gain. Keep that at the back of your mind. Now, Gaurav Bissa, to you, I want a question on Max Financial. Big move in trade yesterday. Looks like starting off well today. Any thoughts here?
Well, if you see in last couple of days, many of these names have done quite well. And it's also forming on daily charts. Also, it is forming a bullish flag pattern. It's a continuation pattern that generally means that the uptrend that you have seen in last couple of weeks, it can continue. It has closed at a very crucial juncture. So if it sustains at level of 455, there's a very strong probability it can test levels of 480 in a day or two. It can happen today also. So it's a very strong pattern. Volume participation also interesting. RSI is also supporting. Everything looks very well. I think if 455 is held on to, and if one gets a price around 460 also in the opening trade, one will keep a 10 rupees stop loss play for at least 25-30 rupees gain.
So you are suggesting buy even at 460, keep a 10 rupee stop. The gains could be 20 to 30 rupees.
Minimum, yes.
Okay, well, that's a bullish call on Max Financial, I would have to say. Mayuresh point is well taken, though. Fundamentally, you wouldn't want to get into some of these names until the deal is out. But, well, let's wait and watch what happens. Economic Times report suggesting that the deal could be announced today with the Axis numbers. Let's wait and watch. It'll be an interesting one. Axis results, fundraising, and if this deal gets announced, then this deal. So 2 or 3 things that you would be watching out for. Now, the pocket that was so active yesterday was specialty chemicals, wasn't it? And Mayuresh might think that every time he's here, we ask him about it, but he tracks this space so closely, Mayuresh. Now, I'm forced to ask this to you. This update by RT Industries is so robust, and the kind of gains that some of the others made. I don't know if you track an alkyl amines, for example, but what a big move in that stock the last few days. Any thoughts on these 2 names first?
Yeah, so I think as a space, it looks very, very interesting, Neeraj. So as we've discussed in the past as well, I think this space is something that will hold on over the next few quarters and years as well. There might be some disruptive forces at play because of lockdowns in this quarter and the next quarter as well. But the longer term trajectory probably looks very, very robust. So for example, I think the order that has come Naveen Florine's way, for example, I think, and kind of execution that they'll start doing over the next few quarters, I think is going to be hugely accretive from an earnings perspective. So a lot of players within this space should benefit. I think the niche players specifically in terms of provisioning of key materials for a lot of diversified industries globally, I think should benefit even stronger because of realization growth, volume growth, and therefore earnings growth. So yeah, as stocks within this sector, I think stocks like Aarti, Naveen should continue doing well and remain extremely positive on that. Neeraj.
Any thoughts on alkyl amines, Mayuresh? It's not as, I mean, it may not be a specialty chemical stock, but it's got some chemical element to it, and the stock has done very well.
So you can very well hold on to that because I think the products that they've got at this point of time are extremely robust. I think the expansion that they're doing at this stage, yes, the realization growth and the EBITDA hit might still come through because of the profile of the products that they're doing at this point of time. But I think the capital allocation strategy that the management is doing, the realization and the overall volume growth for all the key products taken together at this point of time, I think they're very, very strongly placed. You look at the competitor, I would not like to name that, but again, I think the capital allocation is a little bit off track on that one, at least in the past. So I think alkyl probably remains better placed on all these key parameters. So yeah, it's a clear hold. I think valuations is the only thing which is probably disturbing me because they've got stretched a little bit too far. But anybody holding should hold on because the prospects for a steady earnings growth would still continue for this one over the next few months.
Okay, IndianOpen starting off 10% higher. Ambuja Cements 5% higher at 181, so not that 10% up move, but IndianOpen is locked rock solid out there, 448 at the end of the pre-open session. Mayuresh, for somebody holding, I mean, may I request you to become a bit of a fundamental trader, if you will, Mayuresh, and tell me if somebody is holding on to IndianOpen in the portfolio, would you continue holding on or would you swap out of this strength into something else in the financial space?
So largely, I think how the results come through is going to largely determine the financial performance. So I think Axis Bank's numbers will also start determining how the entire banking sector, specifically the larger private sector banks, move. The second element from a book value perspective itself, I think on a fundamental scale compared to standard deviations and what we've seen in the past as well, I think it is trading below book for a period of time over the last few weeks. And the expectations is that it will over the next few quarters as well, in terms of the adjustments that they need to do, both in terms of loan growth, how they probably adjust their liability franchise as well at this point of time with deposits going off. But there is healthy deposit mobilization as well. So I think the stock might react, as I said, for positive numbers. But do I have the fundamental scale over the next few quarters? Because the next 2 quarters might actually start determining the entire trend in terms of how do I determine the book or the adjusted book for IndianOpen. So yeah, from a fundamental trading perspective, the stock can very well give moves as I believed, and the uptick probably seems to be so. But I think if you're making money out of that from a trading perspective, I think keep your stop losses. Amit will be the right person to guide that and take money off the table if you're making money over a shorter period of time.
Okay, so the pre-open rates have settled. Viewers, let me quickly tell you about some of the active movers in the session today. On the back of Ambuja numbers, ACC is done well, so keep that at the back of your mind. That stock too is opening up about 1.77% higher, 1158. A big move in ACC in the last few days. You have to bear that in mind. From 1034 on the day of the results, it's moved up to 1158. That's the big move in ACC. The other one that seemingly is doing rather well for itself is RT Industries, 1045. It was at 945 on open yesterday, so do watch out for that one as well. Watch out for Hdfc Life. The start is not looking all that bad. It's probably not as much as what an ICICI Prudential did, but it's starting off 2% higher at 495 or thereabouts. And Ambuja Cement, rockstar really, starting off 4% higher. But well, I wonder, Gaurav Bisa, I don't know if you look at pair trades or otherwise, but typically IndianOpen, RBL, etc., all tend to move in tandem on the back of this big move that we are likely to see in IndianOpen Bank in the session today. Would you be tempted to trade RBL Bank?
As a matter of fact, we had given a momentum trade on RBL Bank. It always carries some additional risk, being quite a volatile name. But yes, if you see the daily or the hourly charts, I would not call it as a bottom formation happening, but there's a very strong chance that stock can jump towards the low for 130, 135, and we can see that happening in the next couple of days.
Okay, Amit Harchekar, since you're not bullish on NBFCs, but I reckon you're still bullish on banks, what's the top banking trade today?
Well, I would be buying Kotak Bank even at these levels. We think Kotak Bank has the potential to rally towards 1600, 1650. So one can buy even at these levels. Stop loss can be placed at 1180, and the target is positional. We are expecting the target to be met in 2 to 3 weeks.
Okay, viewers, keep in mind for all of these trades to work, I mean, you got to have at the back of your mind a direction that the bank nifty and the index may trade. I think the reason why there is such a bullish undertone towards specific stocks from an Amit or Gaurav for specific names is because of their index opinion as well that they have. So you have to keep that at the back of your mind when you're trading. But since you're minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. First up, IndusInd Bank reported a strong net interest income growth of 45% higher than consensus, but profit declined 16% YOY on account of higher provisioning. Hdfc Life Insurance gross premium rose 3%, but profit declined 14% YOY. The company is looking to raise 600 crores through NCDs. Muted quarter for Ambuja Cement with revenue down 3.4%, profit down 6.5%, but the highlight is margins improving due to lower power, fuel and logistics cost. Reliance Industries board will consider rights issue along with earnings and dividend on Thursday, April the 30th. The board of Just Dial will consider a buyback on Thursday, April 30th. And lastly, we are watching earnings from Axis Bank today. Let's see if there are some announcements that accompany these earnings as well on fundraising as well as maybe an insurance deal too. By the way, we shouldn't lose sight of the fact that amongst all these mid-sized chemical companies which did well, UPL has been doing exceptionally well in the last 1 month. 12% up for that stock, which is usually a bit of a sleepy duck. Otherwise, almost every other parameter, UPL hasn't quite gained. Looks like starting off 3% higher today as well. Is it worth a trade, Gaurav Bisa?
It will have some risk because then one will have to have preempt being done in the name. There's a hurdle at levels of 355, 360. So one will have to buy only about those levels. One can buy here because the momentum is strong. The breakout area was around 335 and it's retested the breakout area and gone up. So one will keep a stop loss of 335 and buy at the current price also. But the momentum, the pace would increase only about levels of 360.
Okay. Well, Reliance Industries, of course, was a buy given by Amit Harchekar, 1450 and counting 1.42%. Mahresh Joshi, between Reliance, I'm asking you a tough question. Between Reliance and Bharti Airtel, if somebody has to buy one name, which one would you suggest and why?
It's really tough. No, so I think the results will be very, very key to watch out for Reliance. But both the stocks are having their own dynamics. So with data consumption going higher, expectations of constrained capex, African operations still holding up. The raise that they have done ensures that the AGR dues are paid off. So Bharati probably even on an EBITDA basis still remains a hold. For Reliance again, I think the news that has probably come through and the expectations of GeoMart kicking off quite significantly. I think the debt deleveraging that comes on the balance sheet and the feedstock exposure that I've got even for the refining business, I think that should probably hold up GRMs. With the new IMO regulations, I think the GRM should also hold up compared to Singapore or the other upstream companies. I think to answer your questions, Neeraj, if anybody hold on to both the stocks.
Okay. The other one, which technically might be looking very strong, is Deepak Nitrite, 2% higher at 490 now. Amit Harchekar, you want to take a chart check on this one? I haven't asked you about a specialty chemical stock. What about Deepak Nitrite?
Well, the trend seems to be on the positive side. We can expect the rally to extend towards 555, 560. There's a small bullish flag which is visible here, so I would suggest a stop loss of 445.
Okay, 445. The stock could ride to about 555, 560 is what Amit Harchekar believes. But Aarti Industries is rock solid, 2.5% higher after that 10% up move in trade yesterday, 1045 for that stock. Do watch out for this one. One last, actually, we have time only for the top calls right now. Gaurav Bisa, I'll come to you very quickly. Your top call for the day today.
It would be Titan, the kind of pattern it has formed some amount of interest at lower levels. It can go towards 970, 975 when we keep a stop loss of 905 and belong the name.
Okay, Titan it is. Amit Harchekar, your top call for the day.
Well, I would be buying Infosys with a stop of 640. As I said, we are expecting 18% rally in service sector index. So we are expecting Infosys to test 750.
Okay, so he's betting on IT big time. Gaurav Bisa is betting on Titan because of the patterns. The markets have started. Let's take in quick thoughts on, let's quickly first monitor what's happening. 1% higher for the Sensex and the Nifty. The Bank Nifty participating 1.7% higher. Big move there. 20,434. This has been a remarkable uptick in the Bank Nifty. What's leading? IndusInd Bank, Axis Bank, HDFC, Bajaj Finance, all of them in the green. What is supporting the index itself is Reliance Industries too, by the way, up about a third of 1.13% or thereabouts. Tech Mahindra up about a couple of percentage points. Am I seeing any other IT name? No, not quite. But Tech Mahindra is right up there. Axis Bank and IndusInd. Watch out for these two names. So what is not doing well? ONGC, not unexpected with crude price doing what it is doing. But remember, you can only flog a dead horse for as much. This one has fallen so much already. Don't know how much more. Vedanta corrects. Exposure to K and so on and so forth. All of those impacting too. Wipro incidentally is in the red. Bharti Airtel is in the red. You have to take credence to what the market is telling you. Never mind how much you might like telecom. Bharti is somehow having some issues right now, and the stock is just not doing too much in trade. What about some of the other usual suspects before I get to the top movers? So Max Financial 3.7% higher. Watch out for this one. Ambuja Cements 2.7% higher. 177, 178. Watch out for that one. There is some strength in Deepak Nitrite 497, 498 now, nearing 500. Vinati Organics 936, 3.5% higher. Aarti Industries 1046. It seems to be a day wherein the specialty chemical stocks again are rising to the fore. What else? Adani Power should be starting off lower, so that's the other name that you have to keep in mind. Future Retail down about 5%. There is weakness, as I said, in Adani Power. Yes, ICICI Prudential corrects a bit, so watch out for that one as well. And Gujarat Alkalis at the broader end of the spectrum, just dial on that buyback news. Some of the other names that you have to monitor. Pfizer, after that big rally yesterday because of the dividend, rises another 4.5% today. Quick opening thoughts from our experts. Gaurav Bissa, anything that the open suggests? Would you change your trades that you gave on open? Any particular stock aside of the top call that one should watch out for?
I would just suggest that we have opened a gap up note, and generally when there's a gap, you always give some more time. If there's a consolidation and if it again goes above levels of 9,390, 9,400 on the spot side, we can see some more upside. It can be a 150, 180 point down upside day to day. I wouldn't buy here. I'll just give some more time for consolidation. And apart from MFSL, which we had discussed in the beginning, I think now one can focus on SRF as well. If it sustains above level of 3650, one can keep a stop loss of 3590 on the upside. 3800 is what I would be looking for SRF.
Okay. What about Gaurav? We'll leave it at that. Thanks much for joining us. Really appreciate your time this morning. Stay safe, Gaurav Bissa. Amit Harchekar, quick opening thoughts. Bank Nifty is up 1.9%.
Well, I expect the overall market to go up, and I think it should be led by IT, what we believe. Apart from that, as I said, we have a very positive stance on oil and gas. We believe Reliance to be the key driver. Overall, currently the weightage of Reliance Industries in Nifty is around 12.5%. We expect that weightage to go up to around 16 to 17% in next 2 to 3 months. So Reliance would be a key driver for this market on the upside. Apart from that, ITC, we think the stock has completed its consolidation phase and we are looking for a target of 250. So ITC can be bought even at these levels from a positional perspective. Stop loss can be kept at around 160 rupees.
Okay, Amit, we'll leave it at that. Thanks much for joining in. Mayuresh Joshi, for somebody who is feeling left out, should this be a buy, this rally?
You have to be very, very selective, as I said, Neeraj. So I think how the earnings hit will start translating in the next, for this quarter and the next quarter as well. I think that's going to have a substantial say. Yes, I think stimulus packages have been announced. We are expecting one coming in from our Indian markets, for the Indian markets as well. So with that respect, I think the momentum might continue, but I think it's going to be a range-bound trade broadly for our markets. So the broader markets might still continue outperforming. So specific pockets, as I said, I think pharmaceutical very, very selectively, specialty chemicals, where I've remained extremely bullish about, and selective on certain consumer discretionary stocks as well in the broader spectrum. I think these three large pockets should be something on the investors' radar at this point.
Okay, Mayuresh Joshi, we'll leave it at that. Thank you so much for taking the time out and being with us and giving us your perspective. Really appreciate your time.
Thank you.
Okay, in a bit we'll get in Pramod Gubbi. And my producers will of course alert me once Pramod Gubbi is on. But well, just want to one more set of round of stock spotting before we get in Pramod Gubbi in this conversation. Remember, Adani Power is starting off weak. Ambuja Cement is staying strong. Bajaj Finance is 2100. And ICICI Prudential is looking slightly wobbly in trade. So do watch out for all of these names. Okay. Pramod Gubbi Johnson with his thoughts. Pramod, so good having you. Thanks for joining in. What's your sense, Pramod? A lot of people look at 2008 and look at bounces that happen in a bear market as well. What is your sense? I'm not asking you to give me a tactical trade, but I'm just wondering, do you think the pain is behind us, or is it even possible to predict that?
Yeah, I think the latter is right. It's pretty much impossible to predict that. Look, short-term stock price prediction is always a challenge, and more so in a scenario like this where nobody knows what's going to happen. Right? So whether it in terms of the virus or the related effects in terms of the slowdown in economic activity or the complete halt in economic activity. Neither do we know when we will reach the bottom in terms of cases. Yes, the recent data suggests that the number of cases, daily new cases across the world is slowing down or coming off quite consistently. Therefore, there are hopes built about the sort of stringent lockdown measures being lifted sooner or later. But then, there talks about a rebound and stuff. So we don't know. Given we don't know, and particularly in an atmosphere like this where there's plenty of liquidity floating around, that makes it virtually impossible job to predict the market in the short run. In the short run, typically you have stock prices driven by two factors. First is the sentiment. Sentiment again will be driven off whether we will see an improvement in the number of cases and therefore the lifting of the lockdown. More importantly, I think liquidity, the sheer amount of liquidity that's been pumped in by central banks globally. It's been a surprise rally because there is absolutely no change on the ground in terms of economic fundamentals. Yet the stock markets are suggesting a rally, and that can only be attributed to liquidity. So that makes it again a big challenge for anybody to fight the market on liquidity. Having said that, I think if you are like us, at it from a longer term perspective, in the long run, prices will have to converge to fundamentals. I think in the long run, you're better off betting on companies which don't have existential challenges, irrespective of how the short run will pan out, how long it will take for the economic activity to come back. If you're betting on the few that will sustain this crisis, then you're still better off from a longer term perspective.
I wonder, from the monies that you might be getting, or if you are sitting on cash, Pramod, what are you doing? Are you looking to deploy at every opportunity, or are you waiting for some down days that could come in because of global factors or otherwise? I know you said you can't time, but still just thinking out loud.
No, exactly for that reason, we don't take any cash calls. We don't try and time the market. The only factor we consider before making a purchase is if the price at which the stock is available today in the market, is it significantly below our conservative estimate of its fair value with a significant margin of safety. As long as that criteria is met, we go ahead and buy the stock. It doesn't matter if the stock were to be available 10% lower tomorrow, because we don't know. But given the market situation, I think a lot of the stocks, in fact, all the stocks that we want to buy are fulfilling that criteria, i.e. that the current market prices are significantly below our estimate of their fair values. So therefore, with a 3 to 5 year view, we're going ahead and making those purchases.
Interesting. So aside of those high quality financials, and I think the last time that Saurabh was here, Saurabh was telling us that you are also looking at the second run financials wherein the price damage was very severe. But what other pockets, Pramod, are you seeing valuations where there is possibilities of growth, but valuations at a stark discount to averages?
Well, I guess, for a consistent compounders portfolio, we haven't really made any changes at all. And in the near term, it's unlikely. But for some of the other portfolios where we do take a little bit of a tactical stance, we are looking at potentially autos. Autos, again, a sector where prior to the crisis, the balance sheets were pretty strong. unless and until you have a view that the world will change structurally post-crisis, which we don't share. We believe some of these franchises will be able to survive the crisis. There are no existential challenges, and on the other side of the crisis, whenever the recovery happens, they are likely to take a meaningful share of that recovery. So autos perhaps one sector where we are looking at very closely. Similarly in pharma and IT as well, again, may not be affected massively by this downturn, but there again, balance sheets have been strong even prior to the crisis. So there are no existential challenges again. So the only thing that you need to assess before making your shopping list is will the crisis have an existential challenge for the company in question or not?
How are you seeing the performances of some of the cement plays? I mean, it's a sector that was in doldrums. A lot of people believe that if any activity has to happen, it has to be infrastructure related, will happen from the government, and the only way you can play it is through cement. The valuations are reasonably good, and the results on the cost control front from the two Holcim Group companies seem to be okay right now, Pramod.
Yeah, so look, I mean, cement is clearly a cyclical sector. Although infrastructure has supported some of the cement volume growth in the recent past, the bulk of the growth or the sustainable growth will have to come from housing and real estate. So unless we know when that recovery will happen, it's not really clear whether there'll be a sustainable rally in, or at least cement volumes picking up. Infrastructure alone, I don't think can carry. It requires significant spending from the government. The government has done its bit over the last few years, but for a sustained recovery in cement volumes, you will need housing to come back. I mean, the country needs housing to come back for many more reasons, but certainly for cement. There are a few good quality cement companies, but given the cyclicality of demand, it sort of at least doesn't make the cut for a consistent compounders portfolio.
Okay. There is some serious moves happening within specialty chemicals. Pramod, I don't know. You guys have a couple of these names I know, may not be specialty, maybe normal chemicals, but you have some exposure there. But these stocks are not trading at any kind of discounts and still are seeing some serious buying. Aarti Industries, a case in point today. Alkyl amines inched up quite significantly the last few days. So chemicals, specialty chemicals, seeing some serious buying. Do you think there is a method to the madness here?
Well, again, just stepping away from the short term, some of the drivers for specialty chemicals were anyways underway even before the crisis began. This is perhaps one of the few sectors in India where manufacturing can see some success because you don't need large tracts of capital. It's not that capital intensive where we tend to lose out on some of the other East Asian countries. Nor do you need large volumes of labor where again we become less competitive compared to our Asian peers. There is an element of science and technology involved, which is where we score the best, and hence specialty chemicals or chemicals in general tend to come up. Now, given this crisis, given that chemicals was a large part of the Chinese manufacturing for the West, and given the West has experienced some sort of a disruption by its heavy reliance on China, there's clearly more talk about how capacities could move from China to India. And India has clearly established its credibility. So given the stark difference in the size of the industries in China and India, even a small shift in that capacity towards in India can provide a significant growth impetus for specialty chemical players. But within that, having said that, you still need to pick the right ones. Obviously, the same issues that concern China, which was environmental norms and so on, could also impact some of the Indian players. So therefore, before going out to buy blindly, you need to establish whether there are sustainable franchises in India as well. There are a few. We own a few, but I think that's clearly the driver that's pushing these stock prices up.
Pramod, I have one last question. Based on the developments, the uncertainty around the lockdown extension or what have you, are there pockets that you were bullish on earlier where you guys have changed your stance?
Not really. I think the only sector that's gone up is the staples sector, and we're not changing our stance there. So the couple of staples companies we own, we're quite comfortable with those, because here the demand positive is longevity of demand rather than the short-term demand.
Pramod, can you explain? Sorry, I missed out the answer.
Yeah, so I was suggesting that more than the extent of demand is the longevity of demand for staples, right? Because we're still a third world country with significant number of people living on essentials. So given the essentiality of these products, we're likely to see a really long growth runway for this sector. So despite the fact that it's run up somewhat, we don't think there's a case to say that enough is enough on FMCG or staples in general. So no, I mean, in short, I don't think our views on any of the sectors, either from a demand perspective, certainly from a demand perspective, has changed. More importantly, I think even in these sectors, you will see consolidation driven by the crisis, because the crisis will certainly hurt the weaker companies in every sector, and therefore the 2 or 3 market leaders or who have very strong competitive positions will come out stronger on the other side of this crisis, and therefore that higher market share will mean higher growth despite overall growth not being that high. So we remain quite stable and static in terms of our portfolio and our views on the different sectors.
Okay, Pramod, we'll leave it at that. Thank you so much for taking the time out and giving us your perspective. Really appreciate your time.
Thank you.
Well, viewers, who would have thought the bank nifty is staying up 2% higher, but the indices are coming off, and I reckon part of it could well be Reliance. And remember, I was talking about this in the morning on the show, that while Reliance looked good from a technical perspective, oil coming off and a rights issue would all not augur well for Reliance Industries, and that's what's happened. We've had a bit of a dip in Reliance Industries in the session today. So, I mean, not to pat my back, I'm just trying to say that sometimes you just got to apply some logic to the overall piece as well. What's doing well is IndusInd Bank 10% higher and Axis Bank 3.5% higher. I must say the juice around Max has completely disappeared. Max Financial is back in the red, but if a deal were to be announced, then this could be interesting for Max Financial. So keep that stock on your radar. But we have to wrap it up on this leg of Indian Open. Thanks so much for watching. I would urge all of you though to tune in about a few minutes from now. We'll be talking to Nimesh Shah of ICICI Prudential Mutual Fund to talk about his view on the debt funds issues after the Franklin Templeton fiasco. A lot of you wanted to hear. We are getting you one of the largest players in that space to talk about it. Stay tuned, or rather tune in a bit later on in about 3-4 minutes on BQ Live.